Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. And today is episode 400. That's right, 400. If anyone has actually listened to all 400 episodes, I'd like you to reach out and tell me. I'm going to quiz you and maybe get a prize if you pass all the questions from random episodes. But nevertheless, hopefully, if you haven't listened before and you're listening for the first time, you're in for a treat. I've invited my friend, Julia Carreon, onto the show to be my honored guest for episode 400. As those of you listen and know, every 50th to 100th episode, I bring on someone big, and I'm very excited about this one. I have known Julia for quite some time online. Finally got to meet her face-to-face at the CFA Institute conference in Chicago early this year, and we were finishing each other's sentences on stage. This was, of course, a byproduct of that. Julia is not just someone who's, I like to say, a bit of my spirit animal and online friend. She is also incredibly accomplished, having been a senior vice president at Wells Fargo and Citibank, and having led many digital initiatives and having a very realistic view on what it is to actually implement digital change in an organization. So today is going to be a breath of fresh air and cold water on some people to cool off all the hype on the AI cycle. And with that, here's my interview with Julia. Julia, thank you for taking the time today.
Awesome. Thanks for having me.
All right, Julia Carreon, tell us about your background.
Sure. Delighted to be here. What a great audience you have, Jason. I would love to know if somebody has listened to all 400 episodes, and I will give them a prize too, because that is fantastic. So yeah, 25 years in financial services, almost 15 as the chief digital officer for Wells Fargo's private bank, 3 years as the global head of client experience and platforms at Citibank. And mostly, I think people that know me, and a lot of people in the business know me, they know that really what I want to talk about isn't my titles, but what did the teams that I have led actually deliver? And a couple of them have led the largest conversion of managed investment accounts in US banking history and did not miss a single file. Stood up the first tablet mobile app for advisors on Wall Street in 2014, when most other firms hadn't even thought about it. The chassis for that is used by 16,000 advisors at Wells Fargo. Was also the first to put trust accounts online, was also responsible for fixing one of the largest broken conversions in US banking history, $175 million disaster that I was asked to salvage. And I say those things not to brag, but to actually make the point that I feel like I have staked my career on executions, which you and I talk about all the time, and we have a lot of that in common. And to me, you don't exist unless you're executing. And our business doesn't care about it the way that I think we should. And that is how you and I met. And so I'm super excited to dig in.
Frankly, I think it's, yes, you don't have to brag, but you should be, because frankly, all of that, first off, besides the number of lives you've touched, the number of people in America you've touched through all this, never mind other organizations have to follow that lead on everything you executed. You've had a huge impact on the industry. And beyond that, the scale of those projects and the stakes of those to be able to execute on those things, the reality is that that is mind-boggling. It is mind-boggling. It's hard enough to migrate a CRM, let alone what you just described. So I can't imagine the amount of double checking, back checking, testing, how long it took, just because we're talking about crucial systems. We're not talking about, hey, I'm changing my Calendly over to Google scheduling. Who cares? That breaks, it's easily fixed. We're talking about severe liability if things don't work and lots of large lost revenues. Kudos to you. Basically, execution. That's all that matters. Talk is cheap. And unfortunately, there's a lot of talk. The reason we were on that panel was to talk about robo-advisors and AI. And we were very much speaking from each other's hymn book in that we're like, everybody calm down. That's basically, you're like, everybody calm down. We're in a hype cycle. So let's talk about that. Everybody's out there talking about, we're over 2 years, about 2 years exact. Is it 3 years? 3 years into ChatGPT, I think.
I don't know.
To the days of 2023. Yeah. So we're 2 years to the date almost. Like we're very, very close, and we're recording this. Very few people's lives have changed, and very few organizations' lives have changed 2 years in. So let's talk about how all the promise of AI is not necessarily going to come to fruition anytime soon, and why that is. Why is it? Like, what are the big challenges that organizations face when implementing new revolutionary technologies? And I know it's a very loaded question, but take it wherever you want to go.
Look, first of all, I have a very, very straightforward answer about why we are not where we should be in terms of technology and AI adoption and all of these things that we talk about constantly in the business. And that is because execution is not sexy. And in large organizations, what happens is a lot of highly paid people feel like the job is done when they've won the funding, because it really is just about putting together a pretty PowerPoint and saying whatever they need to say to get the money. And then once they get the money, they hope that there's a magic button or somebody, some slob that they can turn it over and then they'll get the
they often
project done.
start the project and hand it off to somebody else, and then it's their career if it fails.
That's right. That's
Yeah.
right. So number one, I believe, and you talked about this, is like what needs to change in order for us to start executing at scale. Incentives need to change, because the reality is that I don't know anyone who has actually been fired for screwing up a major initiative at a big bank where they made all kinds of promises that were never realized.
What's funny, I feel like our entire system is not based around that. Everybody loves the narrative and not necessarily the reality of getting their hands dirty. And you even see in the stock market, an announcement of a deal or some sort of innovative change happens, and it's like, oh, they're up this much on the announcement that they're going to do something.
Yep.
Okay, I get it. At some level, there is, okay, if there were X today, they should be Y tomorrow if they execute, and let's discount that somewhat. And okay, at least they're on the right trajectory. There's some of that, but the reality is we fall in love with the narrative. And you're right. I don't care how much potential you have in this world. It's all useless unless you execute. So you've never met anyone who's been fired in a bank for failing to do that. Yeah, I can commiserate with that. But let's talk about the reality of current banking. Let's start there. So let's be frank. How many systems are still on COBOL?
Exactly.
Right? We're talking technology that's over 50, 60 years old. And the reality is that it's high stakes, it works, and it's a risk to change things. But we haven't fully finished, like I said to you earlier, we fully integrated mainframe technology across the industry. We fully integrated desktop computing across the industry. We haven't fully integrated cloud computing, in my opinion, across the industry.
I
And we
agree.
haven't, or mobile computing across the industry. If you think I'm wrong, how many things can you still not do in finance from your cell phone?
Yep.
So we have that, especially with traditional mainline banks. But let's talk about, okay, you talked about the incentives, and that's really career incentives around management, right? So let's talk about what's necessary. So from your standpoint, if you were running a big back office right now, and they were saying, Julia, reimagine this division utilizing artificial intelligence, what is it you need to create? How would you go about it?
Look, okay, and I love that question because I often get asked, do you have a playbook for how you execute? And does that playbook change with the technology? And my answer is actually the playbook doesn't change because the tech is ultimately irrelevant, right? The technology is only as good as the people that are executing it. And that goes for AI too. And the only thing I think that is different about AI from the other hype cycles, which I think you and I agree on which ones those are, right? The advent of the internet, then mobile and cloud computing and AI are the four in my lifetime that I've really seen. And the thing that I say is with AI is that there is so much misunderstanding about it that I really believe that many executives believe that it will execute itself. So I actually think that is just so magical. So
You're not wrong. I'm sorry. I'm just laughing because like so much of this is, don't worry, the AI will figure it out. Okay, but who's going to tell you if the AI is wrong?
right. I think actually this particular moment in time is even more dangerous than others because of this misunderstanding of AI and the idea that it has this magic button. I really think that we are going to see many more millions of dollars of wasted capital. We are in for a bloodbath in terms of the amount of money that people are just throwing after bad projects, I think.
We've already seen it. MIT had a
Yep.
report that said was it 95% of all AI pilots within companies are failing with zero productivity gains. Now, when
Yep.
you stop to think about how big that number is, we're talking about like major Fortune 500 companies dedicating major line items of their income statement to this, and
Yep.
they have nothing to show for it. I often make the joke of like, of course not, because it's actually what they did was they handed out a bunch of toasters and told people to use them without incentivizing. And what I mean by that is when you treat a revolutionary technology like it's just here's some new toy to play with. Just figure out how to basically do the thing you were doing before, but now using this thing. First off, you haven't incentivized the people to change. Secondly, you've in fact disincentivized them because if they do the thing and fail, they're going to get blamed for they don't have any leeway, they don't have any slack. And regardless of that, like humans don't change unless there's a reason or need to. And not only that, you're giving them the thing that you think that they are afraid is going to put them out of work. Like,
Yes.
why do you think this is going to succeed?
That's 100% true. And I actually didn't even answer. I wasn't trying to be a politician. I didn't even answer your question about what would I do if
Yeah.
somebody said to reimagine the whole platform. Jason, the thing that I would do, number one, which is I would take a gigantic step backwards and really evaluate my business for what are my burning needs? Where do I see an ability to have a leapfrog event? What could I implement? And then the third thing I would be doing is to say, to what extent is it low hanging fruit? And do I not have to touch my viscous back end? And those three things kind of sound good in reality, but when it comes to executing them, the devil is in the details. And I would be doing a very thorough and thoughtful, planful analysis around that. And I don't think that's what's happened at most of the big firms. Most of the big firms are literally throwing spaghetti at the wall and hoping to God something sticks so that they can have something good to say to their investors.
And what's even worse is that they're turning to the AI itself to basically say, how do I do this sort of thing? And
That's scary.
which is scary. If people doubt that, I think it wasn't E&Y or was it, I can't remember which of the big companies it was, the consulting companies, had to refund the Australian government a bunch of money because they got
Deloitte.
caught basically generating using AI to generate a giant report they paid them a fortune for.
Yep.
It's like, okay, so let me get this straight. You're taking even the consultants are taking a bunch of shortcuts and not truly understanding what it is to do this. So I think you're right. And I want to dissect what you said. There was a couple of things, right? There was the fact that you're not going to be able to get rid of some of these latent systems, right? You're going to have to live with them.
Yep.
Those are separate projects in themselves. And to simply think that, oh, now we have Gen AI, we're going to replace that. No, is that the project you want to look at? You want to look at the project of replacing that? That's basically a reorchestration and migration of your data. That's different. So you have that. Then you have the second. So the first piece is like, what do I not to get rid of? But then you also said, like, where's the low hanging fruit? You're right. Look, what you said is that you didn't say, look, how can the AI do this entire workflow? Here's the workflow, and let's just get the entire workflow of the AI. It's what are the pieces in this entire, I think we were getting at, what are the pieces in what needs to be done that can be executed on effectively to get probably the single greatest gains, as opposed to let's just throw everything at it and God forbid, and hope to God we didn't need a human in the loop somewhere.
Yep. Jason, does your audience understand? Like, I think it's important to break down even just one platform, just like one system. I'll try not to be boring, but do people understand that a performance reporting tool at all of the big banks are literally 30, to your point, at least 30 years old?
Mhm.
They are sitting with the business logic hard coded into the system that there is nobody around who even knows what the rules are. And they cannot reverse engineer them. They don't have the subject matter experts anymore who wrote the damn requirements 30 years ago, and they are stuck. What do we do with this? Because you've got this giant, they're being fed by mainframes that have access to thousands of pieces of data, but they have to make that data smaller and smaller in order to generate a performance report. And all of this logic is trapped there, and people are paralyzed. What do you do? Those problems are not solved by AI magically. Do you know what I mean?
I'm glad you went there because it is, and there's a famous example in Canada I'll tell you about later, that basically like they went in. So just to reframe this, imagine you're a major multi-billion dollar organization and everything you do goes through this magic black box that was not magic. It was thoughtfully constructed back in the day and slowly added to, but no one knows how it works exactly. And now you're like, how do we update this? But if we break the thing, then all the money stops being made and all the liability starts mounting up. The danger is like at the utmost degree. And there's one, again, famous case in Canada where they tried to rebuild their entire back end, and they went into the investment management platform just to track like the book of record. There was over 5,000 macros built over top of this thing, because when they started the entire book of record, there was the tax code was an old tax code that they wiped clean in Canada. They started it fresh again. So like it didn't even do the most basic of things. And so when you took a Power One macro, when you're like, okay, these lines of code mean this, but hold on, was that correcting for something else? Or is this a new thing? Or why was it executed? And there's no notes surrounding it. And you're just trying to figure out the requirements of the system while simultaneously like being a forensic, engineer trying to figure
Right.
out why this even existed, good luck to you, because if you're wrong, it causes so much pain.
Yep. It is exactly that. And then the other crazy thing that I know three big banks were doing is they just said, F it. We're just going to port it from this old platform the way it is to a new platform. Guess
Good.
what? You're not getting any benefit then. Instead, you're just spending millions of dollars for the same old thing.
Yeah.
And this is the conundrum that many firms find themselves
Yes.
in. And I am sorry to be the person on the ground that reminds people of this cold water. But what I don't want people to do is think that that makes me not believe in innovation. My teams were able to launch major transformational change at big banks, but we didn't ever try to eat the elephant whole. And we were very disciplined about execution. And we were always resetting expectations and not getting in over our skis. And all of those things are usually the opposite of what most people at a big bank do, right? They overpromise, they underdeliver, they don't know the detail, all of those things. And this happens over and over and over again. 95% of AI projects are failing, 80% of IT projects fail at major institutions across all sectors.
Yep. And it's not surprising. So that's just, those are the technical challenges, right? It's this entire really high stake hornet's nest of antiquated software without the actual expertise to really, not expertise, that's the wrong way. I'm not trying to dispel people. It's just that they don't have the legacy knowledge necessary to basically fix the thing, or to say, this is how we did it last time, this is how we would rebuild it. So it's difficult. I give them credit. As much as I lament the poor service I get at Canadian banks, I also am sympathetic to some of it, but to a degree. So that's the first piece. Let's talk about the human challenges, right? I'm sure that more than once you have potentially been seen as someone who's going to basically cost someone their job. Because when you go in with digital transformation, when a technology person comes in, the second people hear a technology person coming into this department to look at anything, doesn't matter how you spin it, those people in that back office or whatever it is, they just start worried that they're going to lose their job.
Yep.
So you have organizational and human resistance to this. And I'm sure even the managers in those are basically saying, wait a sec, you want to reduce my headcount? You want to basically make me less relevant? So talk to me about how that manifests itself its way in potential obstacles or politics that get thrown your way.
As you know, the politics at a large institution are no joke. Fortunately for me, because I was anti-robo 15 years ago, advisors love me. So I don't usually have the advisor resistance because advisors know that I am there to make their jobs and their lives easier. And they know that I'm going to listen to what they have to say, which
Mhm.
not a lot of digital transformation experts, whatever subject matter experts do. They pretend they know everything and they
We're
don't.
from outside the industry and we think we can fix this by looking at it for 5 minutes. Familiar with the Silicon Valley attitude.
That exactly right. So I don't have that as a problem for me and my teams, but it is challenging for the head of operations, right? The CTO, all of the people that are charging the front office in order to justify their existence. The number one thing that I have managed to be convincing about is that it isn't about eliminating someone's job. It's about being able to scale with fewer people. So if you are committed to repurposing someone's skill set and they are open to it too, I really don't see this as a zero sum game for somebody in the middle or back office. And I never have. And I actually don't think that AI will change that either because we're just failing at managing to execute AI. But anyway, at least in the short term.
Yeah. And also I'll say that the reality is there are cycles of layoffs and whatever that in any financial institution, but in general, it's not like the financial industry or any major institution who's grown employs fewer people than they did before. They
Right.
just employ
Right.
fewer people doing the same thing. No one wants to risk that or think that's the case because they're putting bread on the table. So I get it. It's a concern. But that said, there hasn't been a single, you look at the actual realities of the two, the last example is the introduction of bank machines, bank tellers. That was always a concern. There could be fewer bank tellers, but actually bank machines made it possible to have more branches, bottleneck. The human aspects are another one that's a concern in terms of the resistance to change. Now, you said something interesting about being anti-robo. Talk to me about that stance. Let's explore that part of your journey.
Yeah, my anti-robo stuff is really interesting because it contextual for the time.
Mhm.
I never believed that there was no room for robo in the industry. I just always believed that it was solving the wrong problem. because I didn't believe that consumers wanted to use a tool like that. They aren't educated enough, they're not sophisticated enough. And to me, it was always a solution in search of a problem. My point of view, which remains unchanged, which I have been completely 100% right about, which is, I just want to make sure we
Go for it.
remember 15 years ago, everyone in the industry should have doubled down on cleaning up their tech stack and
Yes.
getting their data in order to be fit for purpose for when AI was ready. And instead, almost everyone, I don't know about Canada, but in the US,
Oh, worse.
they started chasing Robo as a shiny toy that every executive wanted, whether they needed it or not. And I managed to secure funding, a lot of funding, $500,000 for just research to prove that wrong. So people really needed and wanted to be closer to their advisor with digital experiences. And we have largely failed at that up until this point because we never invested the time and money in cleaning out our data and figuring out our tech debt. Everybody's scrambling to do it now. And again, as we've already said, they believe that AI is somehow going to be this magic washing machine for them and it's going to clean it for them. So we're back to square one in many ways, which I just find endlessly amusing.
I agree with you. So I'll go back to the robo piece. It was interesting too. At the same time, I found the entire fear that this was in any way, shape, or form going to put advisors out of business
Oh,
just fundamentally misunderstood what advisors were. I
totally.
mean, don't get me wrong. If you were nothing but someone who implemented investments and that's all you did and moved on to the next person, you probably deserve to be put out of business, quite honestly. But people are still going to self-select into a human interaction versus a digital interaction, narrow-framed onboarding tool. And that's all it was. And we should have learned from it to clean up our onboarding and simplify our offerings to enable that. But we didn't. To this date, I've yet to meet a dealer who's basically got a great, slick onboarding tool because the problem is every advisor wants to do something different and they're going to optionality themselves to death. So you got that. And furthermore, like there's a natural clearing market for every form of delivery mechanism. So there was a natural clearing market for robos. And guess what? How much growth are we seeing outside of Vanguard and Fidelity? Not much. And those guys are growing because all they did was shift the money they were getting already to a different channel.
Yep.
Because either pick it yourself or, oh, we can also pick it for you. Yeah, I'll take the pick it for me option. So it was a great value enhancement for those. So let's go back to your data and AI piece. Yes, you're correct. We should have it in order. And now, what's the biggest bottleneck we have on AI implementation? Can't feed it the data right.
Correct. This whole data problem, Jason, you almost need to be slugging a martini to really be okay with, like, this conversation is crazy, right? And I think, again, the complexity of our business and the fact that it's regulated has made this problem so uniquely difficult for wealth and other lines of businesses in banking, right? Because you've got lending, investments, trust accounts, all different kinds of investment vehicles. And each one of those potentially has their own visibility and entitlement logic that people are allowed to see. And then you add the fact that people naturally in big organizations don't want to talk to each other, which means that they're not collaborating. Honest to God, is anybody shocked that we're here given all of those complexities?
I just find it's similar to the entire fiasco with Doge, and I'm not trying to get political here at any point. It's this outsider's notion of saying, oh, look, this
Mm.
is ridiculous. This Monday morning quarterbacking of, oh, I could easily do a better job. If you literally think it's that easy and the easy thing hasn't been done, it's not that it's that easy. It's that you're ignorant to the levels of complexity that are involved with this. Now, don't get me wrong. There are some obvious things that should be cleaned up by large organizations that just are not priorities, that do not register on people's radars because it's just not cost benefit doesn't matter. There's those equations that happen as well. But fundamental architectural issues, like, yes, you think they don't want to have things nice, brand spanking clean and new? Like, of course they would, but they can't wave a magic wand to make it happen.
And I promise I won't go down this path too much, but the other part of that and this whole Doge thing is a fundamental misunderstanding about how bureaucracies work. And that fascinates me. I went to graduate school for master's in public policy. The bureaucracy that exists, and then the degree to which things slowly roll downhill and everything has a cause and effect. If it was easy, it would already be done, which then I think goes back to where I always say, if you're going to execute big change, it is possible, but you have to be sober. So that martini gets thrown out the
Yeah.
window.
Yeah. And so we see these examples in operational or organizational behavior all the time of how you try to solve for these types of problems, right? Because small teams tend to move faster. There's the concept of Brooks' Law, which basically shows that small groups of good developers do a lot better than large groups of mediocre developers. The two pizza teams at Amazon to try to limit the number of decision makers, or even Steve Jobs towards the end of his life was obsessed with preventing bureaucracy from killing Apple. Still the policy of no more than 3 levels of decision making, right? It was like
Well,
literally Tim Cook at the top and then the Apple Store person at the bottom and one level in the middle. I'm sure there's probably some informal ones in the middle somewhere, but nevertheless, it's like you see, this is a thing that happens to all organizations. The hierarchies build, each one of them creates a friction. Each people have incentives, they have disincentives, and they're all looking out for their own best interests at the same time. So it's not surprising. Now, one thing we also touched upon, I think it was in Chicago, which is like, okay, great. So then, in theory, according to the way markets should work, a new upstart with brand spanking new technology and all this other stuff should be able to come in with a clean slate and basically swallow up all this market share. There's a problem with that, right? Customer acquisition cost in finance, which is a low margin business, is pretty high, isn't it?
it 100% is. And those sobering facts, I think they're real and nobody wants to talk about them, right?
No.
It's just the dirty little secret that everybody wants to pretend doesn't exist.
You got robo-advisors up here giving out laptops and iPhones, right? And they're taking the VC money to basically finance that, and they're hoping that they got their lifetime value metrics more or less figured out, but you really don't know what those are because they could change in the future. You're estimating what they are, but you know what your today's customer acquisition cost is, and they think that math works. Well, I don't know. If you only have $100,000 at a company and you're paying 40 basis points to them, and you do the math on how long how long it would take them to finance that laptop, they're planning on making more money on you between here and there. So something's going to happen somewhere in that equation. It breaks. And there's a reason why some of these challenges have only gotten so big. It's because at a certain point, they stop burning other people's money and they got to be profitable themselves and live off their own metrics. And that gets really hard after a while. So hard that the likes of Wealthfront tried to sell to UBS and then that falls through. Yeah, yeah. So besides spilling cold water on the entire room like we have to do, you already said fundamentally, let's talk about forget what you would do. What's the advice you give people from day one? It's like,
Yeah.
listen, I want to enact all this change. What is it you tell them to start with?
Yeah. Look, I 1000%. By the way, I've written a book with Shannon Nutter on execution. We have a different book coming out first, but we have written a book on execution because I really geek out on it for a very long time. It's funny or embarrassing. I'm not sure. The number one thing that I tell people is get very, very clear on what your competitive advantage is and do not try to chase every problem. And that I don't know why. You tell me, you hang around with more entrepreneurs than I do. I don't know why that is so hard for people to grasp. You only need to win at one thing. Really, when it comes to innovation, Jason, it's a hill I'll die on.
Yeah. So you're right. And so I deal with, again, a lot of early stage entrepreneurs in particular, and they all fall in the same problem. They are ready to die from indigestion more readily than they are from starvation, right? So yes, they could drive from starvation, but you know what? All they see is opportunity. I could do this. I could be this. I could be that. And they want to boil the ocean. Nice enough young guy at the Future Proof I met, but I saw him present on stage, and then I thought to myself, at one point he basically said, "And we're going to do this, this, and that thing on top of that." And I literally out loud said bullshit, like out loud in the middle of the audience, right? And it just so happened to be 2 seats down from him at dinner, and we guys started talking. I was like, "Dude, stop. Narrow down on what it is you're doing. You are not going to build the end all and be all in one platform." He's like, "Why not?" I'm like, "My God, first off, what are your resources?" Like, small group. Okay, great. So you think vibe coding is going to make up for this? It isn't. I said, you are going to look at the level of satisfaction of almost every all-in-one platform in the advisory space. They're getting crushed in these surveys. Why? Because you cannot be the best thing at all things. I said, name one world-class piece of software that Microsoft puts out. At best, people will give Excel credit. Otherwise, as I said to him, and I make the joke all the time, Microsoft can get away with the crime of dumping teams on the universe and feeling no shame for it. But no, could Slack have actually Slack switched places back in time? If Slack had launched with Teams, would they have ever gotten big enough to sell to Salesforce? Not a chance.
Yep.
Not a chance.
Great
Someone else
point.
that's not a bad idea, but the worst execution I've ever seen in my life, and someone else would have started a competitor. So the reality is that when you're small, when you're starting out, you don't have the luxury of trying to do too many things. You got to focus on the one thing that's going to make you money, end of story. I think the larger you get, you do the second thing, the third thing. If you do too many things in succession, your resource gets stripped, it gets stretched too far, and then everything starts to suck, right?
Yep.
And sooner or later, every major business hits that point where the thing that they were super great at has now suffered completely because they were doing too many things and everything starts to suck. I remember the interview with Tim Cook where he's like, look, I could put our entire product lineup on this table right here, and we're $1 trillion company. There's something to be said for focus.
100%. And I do think the one thing I think will happen is that people are starting to see through it. You spoke about the one person that you saw that was just seemed full of it. I was also recently at an AI conference, and somebody very blustery came on the stage and started saying that he had a magic button for everything and that advisors were going to not exist in the next 48 months, which made me laugh. And I was embarrassed. I
Okay,
was
I
embarrassed.
will put my house up on that bet being wrong. Let's see if he does the same.
No, honestly, I'm going to tell you at dinner, it wasn't at dinner, the number of people that were talking about that poor guy, I had felt sorry for him. I had secondhand embarrassment for him. But I think VCs, if they're listening, they need to get realistic about who they're giving their funding to, because there is a way to be innovative and focus and get some real wins in wealth management. But the minute you hear somebody saying that they're going to solve all of your problems with a magic wand, honest to God, just walk away. You're absolutely, it's just a joke.
I agree with you. They need to get a little bit more realistic, but at the same time, some of them are just like, on the off chance this is right, I got to take the low probability outcome for the payout, right? That's just the nature of the beast. But yeah, I wouldn't have been upset with that guy. I would have literally gone up to him, come off stage and said, how much money are we putting on this bet? And if he said, what are you talking about? I'd be like, then you come with me back on stage and let's have this conversation in front of everybody. If you are so sure about this, I won't give you, forget 24 months. I'll give you 36 months. I'll give you
Exactly.
36 months. How much money? Because I am willing to go to 7 figures.
100%.
But you know what? Bluster gets funding sometimes, sadly.
I guess it does.
Yep. So we can wax philosophical about VC misfires later on or off air, but otherwise, before we wrap up, there's 3 questions I asked everybody on the positive note. The first one is, if you had one, and this is a little bit different for you, this case. If you had one wish for something you can change in your company, the industry as a whole, what would it be? In your case is the industry as a whole. One wish, would you change?
Oh, you know what the answer is? Onboarding. Because if you solve onboarding, you solve so many problems that are downstream of it. Like, seriously, if you do onboarding right, and then all the information from that onboarding flows to the right place and is structured, then you actually could also solve servicing. So people forget that there's a life cycle here. Not you, but like people forget that. And it's onboarding. To me, it's the 800-pound gorilla.
And it sounds so simple, but it's like it is the optionality hornet's nest from hell. Like it is. And the number of companies who come to me over the years, we think we're going to tackle onboarding. Good luck to you. I'm out. I'm not even interested in looking at this problem because you don't understand the nature of the problem. The graveyard of companies. It was funny. I brought this up with Kits this one time when we were on their call, and he basically said, he goes, yeah, we even had to collapse the category in the survey because everybody started doing something else because they couldn't get any traction doing onboard.
No, again, it is the 800-pound gorilla.
It really is. Second question. What's been the biggest challenge you faced in your career? So that is a deviation from the biggest challenge to get the company to where it is today. Specifically, you are the product of company in this case. So what's been the biggest challenge in your career?
I talk about this a lot. I was asked to salvage a $175 million failed implementation that our regulator said she believed was the most difficult failed implementation in her 40 years in the business. And I was dumb enough to say, I can get this fixed give me 12 months and give me a certain number of things that I needed to have. And they met my demands. And over the course of that year, I broke 3 teeth. I had to have my jaw reconstructed. And then finally, for people that know stuff about dental problems, It took a year. And then when I was finished, my dentist was killed during COVID. So, like, when I tell people that execution is hard, having to calculate decimal interest on an oil and gas account, right? And what does that really mean to a client who's missing? It's pennies. That's what decimal interest is. And like, when I tell people that I give a damn about execution, I mean it. And doing that, Jason, was the hardest thing I ever did. And it almost broke me. But guess what? We got it done. We got it done with 1 month to spare, and all of that was flowing. But everything about that implementation taught me more than all the success I've ever had. In that regard, it was very hard, but totally priceless, to quote MasterCard.
It's nothing worth doing in life is ever easy.
That's right.
Yeah. Though that much dental damage, I don't know if I would sign up for that. But anyway.
Didn't do it on purpose.
Yeah. And I guess the last question, and you're doing a bunch of consulting now, but what excites you right now about the business and keeps you getting out in the morning to look forward to what it is you can potentially help create in the future?
Yeah, look, I love this business because we're regulated and responsible, and we can change people's lives with it. And I grew up with absolutely nothing. And my early experience being in the dot-com boom of the early 2000s, I was putting money in a 401k that was defrauded. And the city of San Francisco ended up it was a total loss. So I was like 28 years old. I had been saving for a few years. I think it was something like $19,000 that I had lost. It was because it was a non-regulated 401k company that got stood up during the dot-com boom. So here's the thing. I keep going and I keep innovating and hoping and praying and trying to inspire people to do that, because we need our industry to be relevant. It's absolutely essential that we not innovate to the point that everybody wants to go become a damn bank. And then all of those things are not regulated. And then you have our kiddos potentially getting defrauded. Do you know what I mean? I don't know if I'm being very articulate.
No, I think you are, because we're seeing examples of that, right? Like, how many meme coins that people lost a fortune on? How many other, online? It seems like now we're getting into prediction markets as being part of normal market. People are starting to very much convolute like nothing but idle speculation on rampant gambling with investing, and that's not the same thing.
100%. So I have to keep pushing the innovation agenda, because if we don't innovate, we will not attract the next generation of banking consumers or investment whatever financial services consumers. And that's sad. That's tragic. So that's why I just keep doing what I do. I hope to make a difference.
You have made a difference, whether people realize it or not. And frankly, such is the reward of someone who basically runs projects like this, is that you're never going to be on some plaque on a wall somewhere for it, but everybody's daily lives is slightly bettered for it. Well done.
Thank you.
Julia, as always, a pleasure. So that was today's episode of FinTech Impact. Thank you for joining me for the journey and the episode. If you enjoyed it, please leave a review on Apple Podcasts, SoundCloud, Spotify, or visit your podcast. And again, the offer stands. If you've actually listened to all 400 and you're willing to take a quiz, a live quiz, feel free to reach out. And there are apparently both I and Julia are providing prizes.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.